Hello, good afternoon, everybody. So today is 21st of October. Today's webinar is one of my favorite strategies. We're going to learn how to draw support and resistance levels correctly. If you can remember previously, we've looked at this. We checked how we can find the correct support, how we can find the correct resistance. Today, we're basically going to build on what we've learned already. We want to see how can one use support and resistance levels to get themselves ahead of others in trading. So the first thing which I like to say is that support and resistance, they are not only horizontal levels. We do have support levels that are diagonal. We do have support levels that are horizontal in nature. The same way we do have resistance levels that are horizontal in nature. And we also have resistance levels that are diagonal in nature. So today, we're going to look at both. Let's first of all look at how to identify a good resistance level. So the first thing you want to see is you want to see a peak. Identify a peak, a higher peak. That is, when you have a chart like this, there are several levels. We do have all this. These are not necessary. We're not going to use them. Identify peaks. If you want to get the correct resistance levels or support levels, identify peaks in that market. So identify peaks that have been used previously. So if you have something like this is like a lower peak. The price moved from this point here. It came down, 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 up to this point. Then it reversed from this level, up, 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 until we had another peak at this level. So when you see anything like this becomes a very good resistance level. Whenever the price moves up in one direction or down in another direction, then it moves up and then reverses clearly from that level to the lower side. Always have your levels around that place. And the reason you're having a level is because the price may likely come back to the same place, then bounce off from that point, which means this becomes another resistance level. So this is one way of understanding, of getting resistance levels. Identify a peak, draw levels around that peak. Then when the price comes back to the same peak, that justifies the fact that this is now a resistance level. So should the price again come back the third time, then that will be the ideal place to look for a sell from. So I'm not saying that it's bad to sell this pair when the price gets back the second time. No, you can sell it the second time and also wait and sell it the third time and even the others. So as long as the price does not clearly ascend and break beyond this level and close beyond that level, this remains to be a good resistance level and also a good place to look for a sell from. So let's see if that level has been used in the past. You can see that even in the past we had the same place being used as a resistance. So we had a resistance also here. It has not been used just once. It was not used just once. It was used here. You can see there are several trades. The price attempts to come back but loses below. It attempts to come back but loses below. Then the same place was used as a support. So one more thing we are now adding on to what we just said. If you have a good level, if you have maybe a resistance level, that resistance level must have been used previously as a support. So not only are we referring to level as significant just because it has been used several times as a resistance, it must also have been used as a support. So if you have a resistance level, check and confirm if the same resistance had been used previously as a support. Like in this case, we do have multiple resistance levels. We have multiple resistance points. We have a resistance there. We have a resistance at this point. We have a resistance at this point. And we expect that if the price gets back to the same place in the future, that will be a good resistance to look for a sell from. So you can see that other than the fact that this place has been used as a resistance, it also had been used as a support previously, which is this. So we had a buy, we have a sell, we have a sell, we had a sell, and we had a sell in the recent past. If the price comes back again in the future, then that will be the ideal place to look for a sell from. So basically, we are looking for levels that have been used not once, not two times, but severally. So if a level had been used previously as support and is now being used as a resistance, that level acts as a level of significance. Let's look at another support level which has been support before. So we have this. Look at this level, they have drawn it, and also look at it like this. So this is like a resistance level which has turned into a support. We have it here. So notice how I'm drawing. Basically, I'm trying to ensure that most candles are actually reversing from this level. When the price comes back to this zone, it reverses. When it comes back, it reverses. It comes back, it turns up. The same thing. And when the price now breaks below, we want a retracement back to the same place so that we look for a sell position. And if the price gets back now in the near future, then this will be the best place to look for a sell position. Just notice, the same place is not only support, it had been used previously as a resistance. It had been used previously as a resistance. So you have a resistance, you have a resistance, we have a resistance, we have a resistance. There's a breakout, we have a support here, we have a support at this point, we have a support at this point, there is a support here, we have a support there, a support there, and then there's a big break to the lower side. So another thing which we are adding now to our list of key levels is a key resistance or support levels. You must at least have big candles breaking beyond those levels, not any small candle. So what big candle means is we are struggling, we had to use a bigger force to go beyond that level. So like in this case, we had to use a bigger force to break beyond. The same way, we had to use a bigger force to break below the same place. So whenever you have something like this, whenever you have price breaking above levels with big candles, then that would mean that that level is significant. If you have a level which looks strong, but instead small candles are actually breaking beyond it, then you have to doubt that level. You will need to doubt that level because there is no way you can have a significant level, then the price breaks beyond that level as it pleases. So the price goes up at its own will, it goes down at its own will, just like without putting any effort, then that level is not significant. Such a level is not significant, and we may not regard it as something which is significant. So right now, if you have a level like this, just a second. If you have a level like this, the first thing you want to look at is how many times has price reversed from this level. If you have price reversing several, like we have the first reversal, the second one, the third one, the fourth one, there's a break above, and then we have the fifth reversal from the upper side now being used as a resistance, as a support, So we have the first one, 2, 3, 4, 5, 6, 7 here. We have 8 there. We have 9 there. Then there's 10. And then we have 11 before there's a breakout. Then we have the 12th time the price is reversing from it to the lower side. And as we're speaking now, you can see price has moved massively to the upper side. So as it is now, we are actually within a very good place to look for a sell. We are within the same zone which we are reversing from, which means we don't expect price basically to close beyond this level. So this, if you're looking at this chart now, you're supposed to be looking for a sell positions as you're speaking. Look for a sell orders. Expect that sell to push us up to at least this level here. So look at how I'm selling this. I'm actually selling it within the key zone, not outside the key zone. And if, assuming I had not seen this, I only saw price here with this big candle, I would basically have sold it here expecting price to close below. So with this sell, my stop loss is fixed above this level. So this is almost half the take profit. The stop loss should almost be half the take profit. If I'm taking profits at 4, the take profit should be 2. The stop loss should be 2. So I'm actually risking 2 for 4, which is a good ratio. So this is one way you identify key levels. This is one very good, useful way. you can identify key levels. First of all, the same level must have been used severally, multiple times, as a support and as a resistance. Then we must at least have some big candles. You need to see tails emerging from that level. That's one more thing. Other than having just big candles, you need to have tails reversing from that level. So you need to have several tails. This you can see how many times the price gets to this level but ends up in a tail. The same thing may happen here. We may see price continue up, but then it ends up closing below with a tail. So that is one. That's how you get horizontal levels. Let's look at an example of diagonal levels. So we had level there. This is an example of a diagonal level. Look at this. Like this doesn't look very good though. So we have that. So we have a support here. We have a support there. We have a support. You can see that the price has basically got to this level. We have the same place. We have the same place. So technically, this should be the correct place to look for a buy from. If you're looking at this chart now, you are supposed to be looking for buy positions. Expect that buy to push price up to this level. So if you bought it here, basically you could be expecting you are supposed to be in that buy until when the price is around this level here. So you can see this is still a support. It has been used not once, not 2 times, but 3 times. And if the price gets back to the same place again in the future, then we are likely going to use it for entry. So let's look at the next chart. Let's see if we can get another example. We'll look at gold. So this is how gold looks. So remember, we're talking about diagonal levels. We have a resistance at this point, a resistance level zone. We have a resistance. There's a tail which came up to this point but ended up below. We have a similar thing. We have a similar thing there, and we still expect price to do the same thing there. So this means this should be the correct place to look for a sell from. The same place has been used previously as a resistance level. So whenever you see price come to a level but does not break beyond it, then it gets back to the same place, the same trend line. This is now lower than the previous one. It means that the price may likely be continuing to the lower side. So if the price gets back the 3rd time, you're supposed to look for a sell. The 4th time still you're supposed to look for a sell. Even the 5th time you're supposed to look for a sell. But in case the price now closes beyond this level, that is above this level, then we're going to be looking for a buy position, expecting that buy to push us up to this point. So technically, this should be the correct place to look for a buy from. This should be the correct place where you want to look for a buy from. So expect price to rest beyond, retrace back, then continue up to this point, 2005.76. I hope that makes sense. I hope that makes a lot of sense. So thank you very much. That should bring us to the end of today's session. I will meet again next week at the same time. So thank you. See you.